Hello, dear investors. I am back with 3 stocks you could maybe buy because I think they might be interesting for long-term investment. It's all about long-term investing here. We are searching for quality stocks to profit from sustainable capital gains and growing dividends as well. Not each stock we present here pays dividend, but in this case, 2 of the 3 stocks pay dividends. Let's start with the stock paying no dividends. And a little disclaimer, just don't press the buy button because I think this stock might be an interesting buy. Make your own due diligence first. Okay, the first stock is called PayPal. PayPal just reported earnings. Numbers were okay, but the stock market sent the stock down 8–10%, something like this. And if you look in the performance chart, we can see the whole tragedy. All-time high, close to $310, right now $56. It means with PayPal, if you bought it here, you lost more than 80%, 81%, and this is, not very nice. Anyway, what's the reason for the latest drop in stock price? We have a new CEO on PayPal. By the way, this is my German YouTube channel. I sold PayPal stock back in August 2022. So let's close this. Let's go to PayPal. This is the new CEO, Alex Chris, and he unveiled innovation, or at least he told them it would be great innovation, but it basically revealed that PayPal has a lot to do to improve its core business. What he presented were some points all related to increase or make it easier, the checkout, the payment process, to make this easier, to increase the, how to say in English, the customer experience, not during checkout, but using cashback, trying to connect stronger with the customer. You know what I mean? They get cashback when they make a transaction, and they even get a cashback account where they pay interest on. And if they do this, they stay with PayPal. They always pay with PayPal because they get something back if they use PayPal. And the third point was to improve marketing for the merchants, presenting or getting their stuff sold with PayPal. And very often the new CEO stressed artificial intelligence. And this was a little bit, how to say, it sounded to me a little bit ridiculous because there is nothing in these points you couldn't have done already a long time ago, 10 years ago, using big data or data mining or whatever. Okay, anyway, the points, they were not really innovative, and the stock market reacted already by sending the stock down before the quarterly results were published. That was the second beat for PayPal. But although it's an unlucky start for him, I think he's going into the right direction. And now this makes PayPal a turnaround story. PayPal is a turnaround story for a longer time already, but maybe with the new CEO it works. Because the business model is solid. It works. The last quarter showed that. Total payment volume, everything, the metrics were okay. It was just the outlook of adjusted earnings per share which should basically stay flat. It was that which sent the stock price down. But it came as no surprise, at least not for me, because they need to invest to implement all these points still in 2024. They want to make rollout of everything they announced in this year, at least in the United States. And this costs money, and this sends the earnings per share outlook down. Okay, let's go. You see in the multiples, PayPal multiple of around 11 based on adjusted earnings. And then we have here the fair value based on adjusted earnings. And if we edit, we see this here out of the box. But here gets applied an average multiple of close to 30, which is much too high, because analysts estimate that if everything works as expected, we can see earnings growth of between 8 and 9% in the next years. This is a guess of only one analyst for 27. Skip that. And we see here that in the past, earnings growth was considerably higher than 8 to 9%, which means we need to adjust the average multiple down. The average multiple is used to calculate the fair value, and this does not represent 29 multiple the current state of affairs. So I send it down to 15. It's really conservative. 15. This means, in my point of view, if PayPal is growing in a high single digit rate, price earnings of 15, a multiple of 15 would really be justified. It would be conservative in my point of view. And now we can look or determine the annual yield you get if 15 will be achieved or will be priced in by the market. And this would correspond to an annual yield of 18.7% or 65%, all made from capital gains till end of 26. In my point of view, this is realistic turnaround story. But only consider buying this stock if you believe in this guy here to manage PayPal well. Okay, second stock is from Japan. It's called Zozo. Zozo is a little bit like Amazon, just without cloud. It means they are selling merchandise online, but not everything. They are just selling clothes. They are the biggest clothes online retailer in Japan. This is their website. I guess you understand everything which is written here. And you can see here in the performance, they had a performance in the past of more than 4,000%. I don't know why it's not showing up here. Let's reload. Here you should see in the past 15 years, they had here performance of more than 4,000%. But since 2017, the stock price is going sideward in a very volatile way. And we have also dividends paid here 2 times, I think, in Japan, exactly. Current dividend yield is 2.7%, and you see here dynamic dividend growth. When I tell you dynamic, I mean in the average last 5 years, about around 30% dividend growth each year. But I don't think that it will continue like this, because you see here they had a really dynamic earnings growth, and now it gets a little bit more flat. What they do is they buy back a lot of stocks. You see it here. For a Japanese company, this is not so usual as for a US company. They bought back stocks, about 10% of all stocks since 2012. Okay, we have here the different segments, what they do. Basically, they sell own merchandise, own clothes, and a lot of clothes from third-party merchants like Amazon does. They can also advertise, like you can advertise on Amazon. They are also helping others here, business to business. BTOP, it means business to business. It's here, it's only small. They help their customers, to merchants, to set up store and making IT stuff and helping in logistics. So these are the different segments. And if we look at the multiples, we see here that they were already had multiples of up to 80, which is really brutal. Right now it's about 23. And if we check the fair value, then we can use either adjusted or reported earnings in this case. And here is the fair value. And I zoom in a little, like I always do, or do very often. But here we also see, similar to PayPal, that earnings growth is not as high as it was in the past. We have now earnings growth in high single digits, about 8 to 10% for the next years. And before it was much higher, which means I also need to adjust the multiples down from 38, I would say, to maybe 22. And then we have here estimated annual yield of 7%. And I think this is not attractive enough to buy the stock right now, but you can observe it and check it and set price alert, for example, at 3,000 Japanese yen, and then you would have an annual yield of 12.7. And this is stock price was just a short time ago, end of October, it was 2,700 Japanese yen. And if also the dividend was 3.3%. So in my point of view, Zozo is an interesting stock with a solid business model, also really solid balance sheet, but a little bit too expensive right now. But you can set a buy limit here, 3,000 Japanese yen, and then you are good to go. There are many occasions, possibilities like this on the screen. Okay, last stock is Starbucks. Back to America, and Starbucks performance was also in the long run very good, with more than 2,000% in 15 years. But in the last, since mid-2019, the performance is really sluggish. You can see it here, performance of 2.3% in total over all this period, while earnings are not that bad. So you see that in 2019, earnings per share was just 2.8% compared to $2.8 compared to $3.70 right now. We have a strange looking balance sheet, by the way, which is because they buy stocks, they repurchase stocks aggressively, and the equity is negative for the stock. Anyway, the balance sheet is solid in my point of view. Dividends are safe in my point of view. Business model is solid in my point of view. The quarterly numbers were a little bit disappointing, but the stock price did not drop, at least not considerably, which means maybe we found the bottom. So let's go to the valuation here. Use adjusted earnings, and here you see the fair value calculation. I zoom in. Here we have an outlier. It's because price earnings were extraordinarily high, because earnings were extraordinarily low. We have identified this outlier, so it's not part in the average calculation of the price earnings. Here I make no adjustment in price earnings, because you see here that the expected growth rates correspond more or less to the expected growth rates in the past, which means I take the fair value as is. And then it gets really interesting, because here we have annual expected yields of more than 20%. So in my point of view, Starbucks is really an interesting investment, because you also get, not only might expect nice capital gains, but here you also have dividend of 2% and growing dividends dynamic growing dividends. We have dividends growing around 10% per year. So Starbucks stock number 3, interesting one in my point of view. So we have this PayPal, let's turn around story. We have Zozo, with also very exotic stock with solid business model. Highest dividends of higher dividends than Starbucks, but a little bit too expensive in my point of view right now. And we have Starbucks, which could be a nice buy right now. So, was something you liked? Please drop a comment. Happy to discuss. Otherwise, see you next time. Bye bye.